Over the weekend, while everyone is out and about, you will often find me sitting in my office chair thinking about the ways of the economic world. And during one of my musings, it dawned on me that the Fed has been playing with our sense of comprehension in this whole will inflation be transitory? Because my view is the following: we will have inflation, there will be peaks, and there will be valleys. But until the Fed decides to raise rates, the trend of the CPI will remain up. Now, I'll explain all of this shortly, but first, check out the first link in my description. Shameless plug. I'm building a waitlist here for one-on-one video and audio calls to speak with me personally regarding gold, silver, finance, etc. Now, as we continue here, why do I have this view? Now, back to my explanation. In this article here, the argument for transitory inflation is being made. Essentially, let me scroll down to this graph here so you can see it a little bit better. This is a Bloomberg article. Essentially, in this model that was constructed by former Fed Chair Ben Bernanke, but reused for our current times, he uses Bayesian statistics to forecast probable scenarios for the CPI. Now, in all scenarios, the upper bound, middle, and lower bound of the CPI will be elevated throughout the summer, as this seems to forecast. Then you see a bit of a drop by the end of the year. However, this is short term. This is only a 6-month time horizon between now and the end of the year for this whole graph. It starts, or where you see those lines splinter off. It ends in December. Now, it doesn't account for what some analysts are seeing as an inflationary problem within real estate that usually tends to take a longer time to develop. Now, what could I possibly be talking about? I am talking about the OER. Now, that stands for the owner's equivalent rent. More on that later, but the OER makes up nearly a quarter of CPI. But check out what this person had to say on Twitter regarding the differences in home prices versus the OER in this graph. And I quote, "As investors eye inflationary pressures closely, housing is a big part of the overall inflation equation. Owner's equivalent rent OER makes up 1/4 of the CPI and lags the reality of the housing market." And if you take a closer look here at the graph, the full time horizon, after every major dip and rebound in the blue housing price here, here's a dip, then a rebound. What you'll find is that the red OER line slowly lags to reflect the same moves. Here's the dip after this dip, and then here's the rebound after this rebound. And again, you can kind of see there's a dip here, and then it was reflected later on here. And in more recent times, there's a dip here, and it's starting to dip here. Now, what we should be waiting for is this to come up, or the red to come up to reflect this movement to the upside. Now, what that essentially is saying that, well, with all of this happening here, what this line is essentially, or what this graph is essentially saying, is that 1/4 of the CPI should continue to rise way past the 6-month time horizon that Ben Bernanke's model in the previous article was using, because essentially the red OER lags behind the blue home prices. Now, if we take a look here at this graph that I tend to show a lot, that I did previously, we know the relationship between the CPI and silver is pretty good. Since the year 2000, there's been a 0.6 correlation between silver and the CPI's moves. So this is giving us some longer term bullishness for silver if other factors within the CPI hold strong. But what else can we glean from the OER to better understand its role within the economy? Well, Investopedia has a good write-up on it, and check this out, and I quote, "Owner's equivalent rent is a statistic that is followed by homeowners and tracked by the Bureau of Labor Statistics. Generally, owner's equivalent rent is obtained through surveys asking homeowners the following question. If someone were to rent your home today, how much do you think it would rent for monthly, unfurnished, and without utilities?" OER is a commonly cited measure that provides a gauge for changes in real estate market values. If OER is high, it may be more worthwhile to buy a home rather than rent it. On the other hand, if OER is low, like right now, renting might be a better prospect. Owner's equivalent rent typically changes with movements in the consumer price index. Overall, owner's equivalent rent has been steadily increasing at a rate of around 3% each year from 2014 through 2020. So taking all of this into consideration, we can see how the OER would lag behind home prices and will continue to push the bullish argument for inflation even after the transitory effects of the reopening fades. Now, I want to end with Wall Street Silver here because I've noticed, and again, I'm actually recording this on Sunday night, but I've noticed that some people here are talking about some of the moves we're seeing today or tonight in silver and gold. There was a little bit of a start of a sell-off, and it looks like it's starting to rebound a bit, but this person was saying, any news driving the current selling pressure? And that's currently happening. I actually made a video yesterday that you can watch when the end screen comes up. It'll detail why there was some short-term strength, or there is some short-term strength with the dollar. But again, it's nothing to be concerned about. We have so much bullishness behind metals. It's insane. And things are looking good in the long term, even for the summer, if you are just thinking that this will be transitory. But guys, thank you for watching. Let me know what you think about all of this in the comment section below. Hit that like button and please subscribe if you're new. It's Black Bullion for gold and silver today.com.